Well, good morning, everybody. This is Andrew Horowitz, and here we are for the Trigger Charts pre-market rundown for, where are we? Friday, July 12th, 2019. Thank you for joining us today, and thank you for being here. We do this every Friday. Give a little bit of a rundown what's happening with the market, some of the stocks that are looking like they're going to move, and what's happening with economics, what's happening overall with the markets in general. Also taking your stocks. So make sure that you give us the names in the chat. There's a chat little box that you can go to and give us the names of the stocks that you're looking at and that you want us to take a look at as well. We're going to do this all through what we do with the Trigger Charts Commander Series, our altimeter, aileron indicator, which is separate from the Commander Series, the radar, and looking at our algos that we've built specifically for TradeStation in order to provide some great signals and opportunities, as well as support points and resistance points. So we're going to go through all of that today as well. Let's do a quick check on here. So make sure everybody's alive and well, open their eyes, awake with some coffee in them, and make sure you can see me, first of all, and you can hear me, and that we're sounding pretty good. So give me a little kickback in the chat, please, to make sure that you can hear me and that everything is, sounding just right, and we can move on from there. I'm going to actually move this microphone a little bit closer. Let's see what's happening. Quick disclosure, important notification that I need to give you before we start this is that investing, of course, involves a lot of risk. Any investment at all, whether it's future stocks, whether it's mutual funds, I don't care what it is. There's a lot of risk involved, and there is never any guarantee of performance or results that are related to what we talk about here today. These are used for just educational purposes only, to give you an idea of what's going on and to give you some insight into how you can utilize some of these great tools that we have, as well as taking a look at some of your comments and what's happening. But remember, this is all for educational purposes only. You have to use your best judgment when you are investing. So taking a look at the screen here and taking a look at what we're talking about on the shared screen, what do we got going on right now? Well, everything is all about the Fed, isn't it, right? The Fed has been leading investors around and promising them and making a little bit more of a dovish commentary. And in this week's minutes that they put out and the testimony that they had before Congress, Fed Powell basically had, I would say, as dovish of a stance as you can have, meaning that interest rates probably are going to be cut in July. Now, a lot of people are wondering, well, we have such a great economy. Why is this going to happen? It's going to happen. It's because they've already priced it in. Fed Fund futures are providing, I think, about 100% chance of at least a 25 basis point cut in July. There is, I think, a 16 or 18% chance of a 50 basis point cut as well in July, but I just don't really think that's going to happen. It would really shock the markets pretty significantly and leave a lot of heads scratching about what's going on. We're seeing this not only in the United States, but we're seeing this around the world as well. Mario Draghi, probably in his outgoing goodbye kiss to the markets, is going to look to restart some of the asset purchases. He talked about that yesterday. And we have seen that there is a significant amount of damage that's being done by negative rates. We're going to talk about that in a second. I have a really fascinating chart that we put together to show you. But there is this negative rate environment that's going on around the world. And that is really causing a lot of havoc when it comes to the companies, and particularly the financial sector of Europe. We saw that it happened with Deutsche Bank recently. So what we're seeing is that this is not only concentrated here in the U.S., but we're seeing that Japan and China, with the stimulus programs that are going on there, the constant commitment to asset purchases, a quantitative easing in Japan, and now the United States, once again, even though the United States economy is doing well, our employment situation is doing well, inflation is ticking up a little bit. We saw CPI yesterday tick up a little bit. PPI today at 8:30 this morning came out a little bit higher than expectations, but still 0.1% higher. Not much to worry about. Bottom line here is the Fed believes that an insurance cut, at least some kind of a cut to make sure that we don't have any problems, is going to keep us ahead of all the problems that they see down the road, primarily predicated on the fact that we have a significant slowdown, at least as they're seeing it coming, because of some of the trade wars. We saw that the overall exports and imports from China to America, from America to China, have been dropping off significantly. I think the exports from the United States to China dropped about 38% on a year-over-year basis. That was reported last night. We're seeing South Korea, their economy had a surprising GDP cut of about negative 3.4% over the last report that we just saw overnight. So there's a lot of things happening, particularly in Asia, that's a lot of a big problem. But in Europe, it really hasn't gotten over here, but yet markets are hoping, praying, and doing what they can to expect the Fed is going to save everything. We have next week coming out retail sales, import-export prices, housing starts, industrial production. And one of the things we've also seen is that an interesting situation the last few days after the testimony. We've seen that long yields, in the neighborhood of, we'll call it, over 10 years. The yield curve, it's all of a sudden starts to rise a little bit. I'm not exactly sure what's going on there. Maybe it's due to the fact that we are seeing a better economy, so that usually does affect the long end of the curve, and the short end of the curve is going to be potentially pulled down. And we're going to see that this interest rate cut will actually try to normalize the yield curve, which is inverted right now. This is kind of a cool chart. If you can see that right on your screen there. This is showing the 2-year bond yield, the sovereign bonds. And it's showing us that right now, pretty much of the major countries around the world, the U.S. is yielding about 1.75% on the 2-year to the plus side. That's important to note from this particular chart, because look at the rest of the ones. The rest of the ones are in the negative territory. So what you're seeing here is that there really is nowhere to go for yield. I mean, if you go to Germany at negative 0.75% on their 2-year, there's a whole piece that we've been looking at and reviewing. But realize something. There will be a constant push into the bonds of the U.S. sovereign, assuming there is no real break with our ability to pay, our rating, a sovereign debt rating. Assuming that's not going to happen, which I don't see any reason that it would, there's going to be a continual push into this, because why would you lend money somewhere where you know you're going to lose money? Makes no sense. So we're going to see, as long as there are these negative rates going on around the world, the potential for a lower interest rate environment and a kind of a wonky yield curve in the U.S. And that pretty much puts a floor under stocks for some time until we see this trend reversing. The theme for this week, don't fight the Fed. There's no reason to. The Fed is being very aggressive in their overall process of trying to cut down rates and normalize the yield curve. They realize something. They realize that the yield curve itself is in a very bad situation, because short-term rates and long-term rates and the mid part, the belly of the curve, that center part of the curve that we look at, is not playing along really well. The problem is that when we look at the belly of it and how it is dragged down so dramatically, it lends itself to difficulty with environmental, economics impact moving forward, because lending is askew and you have big problems with the profitability for the financial institutions. And, when you're not issuing credit, or there's a desire not to issue credit, expansions are possibly in danger. So right now what we're having is a situation where there is this need to rectify the problems with the yield curve so that it doesn't lead to a recession. And I think that the yield curve right now, inversion, which oftentimes is an indication about a year out of the potential for a recession, is actually being bent around for other reasons, particularly those negative yields we just looked at. So just consider that for a second. But again, theme right now, don't fight the Fed. The next Fed meeting, I believe, is going to be July, I think it's the 30th. I think it's the 30th. Couple of things to mention. Make sure you're on the mailing list. Go over to triggercharts.com. You can sign up for the mailing list there. You could also make sure to keep registered. We'll keep on reminding you about these Friday meetings. The stocks we're going to talk about, earnings season starts next week. Kicking it off with JP Morgan, Goldman Sachs. We have some of the other banks and financial institutions. We had Bed Bath Beyond, as we call it in my house, Bed Bath & Beyond Vile. Bed Bath & Beyond is out with their earnings. Another disappointment just this week. We have the stocks of interest, some of the things that you've been asking about. NEO, we have STNE, Stan, we have Air, and Zoom. A couple of interesting things on there. We're doing this inside of TradeStation version 10. Do me a favor, click me back. Tell me what version you're using. I'm kind of curious. Just a quick poll. If you're using 9.5 or you're up to version 10 there, and I'd like to hear from you. So just go over to the chat, click that, make sure you're clicking, type it in there and get that back to me. Appreciate that. Yeah, a lot of 10s. We have a great audience today. I mean, look at the amount of people. Wow, it's just flashing. So many people just flashing in the chat now. Really appreciate the fact that everybody's coming aboard here and the audience is growing so substantially. And that's great. So just make sure to tell your friends, tell your family, tell anybody that's interested in markets and what's going on, that we're going to be here on Fridays doing this. Yeah, that's interesting. There's one that just came through. That's what we're doing. 9, 5, and 10. We're going back and forth, kind of testing what's going on. It takes a little while to get used to a few of these things. So let's take a look at a couple of things here. Let me make this a little bit bigger. if I can, maybe. Oh, here, go here. All right, so this is the key reversal indicator. As I mentioned this last week, we're seeing a little bit of heat here, not much, which is interesting. The last time we saw any kind of significant heat was back, when were we here? Back on 620, and we see a little bit of a rollover there. But still, we're not seeing a lot of heat right now with regard to the markets. This is a great tool to look for possible opportunities that will find key reversals. That's why we call it the key reversal indicator. It's cheap. It's on the trading app store over on TradeStation. You can go to the link that maybe Kevin will put in the chat right now about where you can get these indicators over on the trading app store at TradeStation. It's a 10-day free trial on all of these, by the way. Great videos also available on triggercharts.com, the website there. There's some training videos as well. So if Kevin's listening, he can pop that in there for us. But what we're seeing is really not a lot of overheating right now, which is kind of interesting because you would expect that to be the case. And you know, right now we're just seeing that the markets are at a kind of a, you know, +1, +2. Notice that we have on the right-hand side of this, what we talk is about, you know, when you look over here to the right, talk about where the actual market is, or +1, and give you a little explanation of what's going on here and watch the current trend, direction was, you know, all that. So this is kind of giving us a little bit of insight into what's happening with all this. But right now, like I said, in the key reversal indicator, only looks at one thing, only looks at the SPY on a broad-based market basis. That's it. You can't put another symbol in here. It won't work. SPY is the only symbol you can use. Gives you some really good interesting opportunities to look at what's happening with a trend basis and when things are overbought, oversold. But we're not there right now. Again, last time we were there was right there. So that was in the beginning of June. All right, let's take a look at what's going on with some of the stocks I mentioned earlier. So where are we right now? We got ES up 5. We got the minis on the Dow up 71. Gold is up $1, and the Qs are up 9.7. So okay, that's fine. Getting a little bit of action in the morning here. I do want to look at some of these stocks. Let's kind of click down here with some questions recently about NIO. Some of you had questions on NIO. We got TLT. I saw that was queued up. And let me see what else is queued up. We had 2 others, I thought. Yeah, TLT and 1 other queued up. But what we're going to look at right now is NIO. There's some questions about NIO. And NIO had a really nice pop, as a matter of fact. NIO went, I'm going to zoom in here on a daily, but NIO basically went from about 2.5, 2.6 to about 4. That's a nice little move there by all standards. But I want to show you this for a reason, because I think it's really interesting to look at this and very easily find this is on a daily basis if you want to be a swing, you know, in this for a swing trade. What did you see here? And I think this is really pretty obvious, right? What you saw was this great consolidation that happened right around here. The stock really couldn't get below its unfair low or its support level. It held down about the 250 range. And when it broke out and started breaking out, one of the other things you want to look at is look at this. This whole range here, there was clear space. Black clear space is your friend for a vertical move up, and it signaled that there was this opportunity for NIO to move up. Where would NIO move up to? Well, I would say that somewhere its top range of the previous cycle, kind of over here, is where I would look next. And you just simply draw these boxes, and you can start to see where this makes sense. And what we saw was it actually get right about up to that point, kind of came right here. On its unfair, on its high volume node. The green is what we call the unfair low. The red is what we call the unfair high. The blue or the cyan color is called the high volume node. And that's important. That's the highest volume within that swing that we have seen. And you can look at this as a way to mark where are those levels. And if you don't have any fancy drawing tools, just pull up your drawing tools right here. Look at these right here that are on the TradeStation app itself. And what you can do is just simply kind of look for the line. You can see there's a horizontal and vertical line. Take the horizontal line and you can say, where is the level? Well, if it breaks above here, I know there's something important going to happen there. Take that line again and just draw it very simply, or even a box. And you can say, well, if it does, why? Well, because I'm looking at this level, you know, right here. These are all within TradeStation. You can just do that. You can just take them and delete them if you want, and just, you know, move them around anywhere you want and just make them, you know, continue to shape them and do all sorts of things. A lot of different tools in here, from Fibonacci retracements to circles and ovals and text. You can even pull text and say, you know, hey, I like it here, whatever you want to say. And you can increase the font on that and all. So that's kind of interesting to look at and make sure that you do that. By the way, the overall was that most people are on TradeStation 10 right now. Just to get back to that, a few people were still on 9.5, but most people that went through, we calculated that it's version 10, which is interesting. So NIO is actually an interesting place here. Now, what's going to happen with NIO moving forward? That's the big question, right? So that's the thing that we need to look at. So when it comes to NIO, where are we looking? Well, we are back down to, if you notice here, that we came up on this line and we crossed through the empty area, or the hole that we call it. We had a new altimeter drawn, right? 3 marks right here, 3 horizontal lines. We have the red, the green, the blue, very simple to look at. We see that the autopilot called for a long at 280 and it called a move out of it at about 360. So that's important to recognize. So you made that nice profit. The orange is a move out of the position or a profit zone that you want to look at. And where are we now? Well, we're back inside this consolidation area, again, right here. And that consolidation area, importantly, is inside of a hole that we look to the left. So it's inside of that. What I would venture to say is if you're playing this on the long side, really what you need to do is we need to see a break past a former high before you get too excited about this. Okay, so now I'm going to scrunch this down. Oh, let's go end. Push the wrong button. Let's scrunch this down. What you need to see right now, and let me clear this for you, is that we need to see a move, probably I would say above, where is that? Right here. About $4. You get above this line is a big issue. So about $5. That would be pretty good because you see a very tight consolidation here. I mean, this is important to look at. This is really important to look at. You got this consolidation area that's coming in. See how tight those lines are together? I know it's kind of a scrunched up chart, but you see how tight that is? Basically, what you find here is, look how tight these lines are right here. Look at this. This whole area, very tight lines. Right here, they're almost on top of each other. Hard resistance on the upside. So what you want to do is you want to find where those hard resistance levels are, and the next thing you want to do is look for the breakout. Now, where would you play this right now? You know, if you're looking at this right now, what do? Oh, well, okay, what are we doing right now? Right now, you got this hard resistance back above, I would say, right at the $4 line. Probably play it down to when it gets down back to here where I drew this line. Put some alerts there. Take a look at it at that level because those are the ones that are going to make, I think, the most important moves for this particular stock. It is volatile. It does have a lot of movement on it, but just something to look at. STNE. This is a Brazilian company, a payment processing or a fintech kind of company in Brazil. Brazil's stock market has been doing well. There's some pension rules that are going on right now, and there's some excitement about that. But it did, again, I thought it was a really good look at something, and I thought it was really interesting to look at this because it's very clear-cut. It's very clear-cut of what's happening here. What you have is, again, I'm just going to draw a quick line just to really enhance this look right here. You had this level that was about right here that was great support. Stock couldn't get below it. And where would you go if you did get below it? Really, that was kind of your stop out point. From about 26 down to 24, if you got below 24, that's where you start getting concerned. There was nothing there. Stock consolidates. So when we look at this and we look at what's going on, you have this whole area. It goes up, it goes down, it goes up. It's consolidating between the top and the bottom. And when it continues doing that, we have another altimeter that's drawn here, consolidating top and bottom. That consolidation is getting narrower. Do you see that? It's getting narrower, the consolidation. Probably can't see because I have all this junk on there. But when we look at the range, on this, and we see that there is this, look at this box compared to this box. In this box, see how they're getting narrower from top to bottom. When you saw that breakout, when you saw that move from the level of where the last resistance was, and you get from about 29 to about 34 in a couple of days, then you say, okay, now what happens from here? Where do we go from this level here? Well, we have to check off that we see that there is some levels to the left that we have to look at. And lo and behold, probably on the last level where there was significant support before it broke down and we gapped out, okay? What you're finding is that there is this level that we could just draw on like this. Oh, look at that. Interesting, right? It went right to the top end of this range. So the bottom line is when it did break higher and it did go from the level of support, resistance where it did break through, and then we saw it broke right through to the level where it was when there was prior resistance. We see that. Now, where do you have to go? Well, now what you have to do is you have to kind of see it move up a little bit, probably through about this level here before you see any kind of opportunity for it to really break. So above 40, really you could see some action on this. But this was a really good example and a good lesson, I thought, on where are those points of resistance, where are those points of consolidation. There's something else on this chart that I want to show you. And I'm going to zoom in here because this is really cool. We talked about this a little bit last week. But I want to show you this particular altimeter zone that we're looking at right here. Okay, notice there are only two lines. You see that? There is a line that's red and there's a line that's blue. Where is the green line? Well, when you hover over, you'll notice that the green line, and you see that right on the bottom there, the green line and the blue line, or the cyan line, are exactly the same lines. It's interesting because what you have here is a situation where there is a significant amount of support that's developed, and you have two different key points, the unfair low or the support, and you have the high volume node that are on the exact same line. That's really key. That's really important to look at. When you see that, you know you have a really good level of overall support. Keep an eye on that for maybe when, if you also installed the aileron, where you see that there is this move above this, and all of a sudden you get this momentum change from the negative side up to the positive side. So very important levels, what you want to look at there. All right, next stock. This is also an interesting one, I thought. And I drew something on here because I want to show you this. This is a stock called AAR Corp. They are in the defense and aircraft and airline and not logistics, but the transportation parts program. But aside from that, that's really not the point here because we're really talking about technicals, right? And again, all these videos you can see over on triggercharts.com. There's a tutorial area that shows you a lot of things. And by the way, there will be a replay of this particular webinar this morning on our YouTube channel, the Trigger Charts YouTube channel. So you can make sure to check that out as well. So when you look at this one, I thought it was really interesting. You had this level, and let me just kind of click this and move this away for a second here. And I want to show you this without the box for a second. Again, a very significant amount of resistance that we saw that was kind of in this range right here, that across. And we saw there was decent support kind of down that level, broke down a little bit and came up. And then all of a sudden we see, look at this incredible ramp. Look at this ramp. We see this great ramp in the aileron, and all of a sudden you can look at this a little bit like a banger. Couldn't get below, and all of a sudden it starts moving higher. Where does it go from there? Well, from there, what happened was it broke through that support that was the resistance that was support from the prior period. And all of a sudden, there's nothing really to the left. That's why I draw this little box here, because really there was this kind of wide margin right here. And then all of a sudden you broke up. And actually, if I was to look at where you would go from here, the first stop I would say would be about here. But then all of a sudden it started to break higher once again. And now what we did is kind of, you take your box and you kind of look at this on the top end. And oops, moved too high, sorry, right there. Where was that former level of support where it broke down? And lo and behold, you stretch that out right where it stopped. So if you could just, listen, if you could read colors, can you all read colors, right? Everybody can read colors. If you could draw lines and you could draw boxes, you're golden. That's the whole trick. I made this and created this, and I co-founded this company in order to make it easy for me. I needed it to be extremely easy to understand what I'm looking at kind of with a snap of a finger. I just want to be able to see what's going on very clearly without all the clutter. So what I did is I said, you know what? I want to come up with color coding. I want to come up with a thing that I can just draw lines. I can just very easily see what's going on. So that's what happened there. Continuing on, Zoom. Zoom's had some hard times. And let's clear all these drawings. There we go. There was nothing really to look at really with Zoom. You got some area that I would say from probably top end of about 92 that we drew in there, probably down to about 80 or so. It's got to break out. If you do break to the upside, right now there's some problem with some of the issues with Zoom. There's some weird company discussion going on. You know, just watch this and kind of see what's going on there. In terms of the the breakout above, I would say about 94, got to look at. Somebody mentioned TLT, and I want to bring that up because I think it's kind of interesting. TLT. TLT took a great ramp. Obviously, this is when the price of bonds are being lifted, yields are coming down. We saw this kind of runaway move from April. We saw that, and I'm going to zoom into this because I think it's important here. What are we seeing here? Notice something. That over the last several days, we saw that a breakout was kind of occurring. It was an interesting level. Again, what we're looking at is an area of, I would say, consolidation inside of here. We saw that breakout to the top that was kind of a little suspect, that kind of top area right here where it kind of moved above there. And then what happened? Well, we started rolling down. Where are we going from here? Well, if I was to take a look at this and I would think, okay, where are we heading to? The potential, the first stop is right about, I would say, right about here, kind of looking across to that level there. And from there, we could possibly even drop a little further, probably down to about this level, which is, I would say, about the 120, 23, 24 level. Why is that? Well, we really have nothing to the left. Always look from right to left. Our motto here is look right to left and see what's going on. So when you're looking at this and looking right to left, what you want to notice is that there is this significant amount of a hole or dead spot overall, and that's going to be something that you really want to take a look at because it has the opportunity. Right now, it's holding on support. If we click this, very magical. We are on the previous support right there. That's where this is holding very nicely. But I would suspect that if, going into the Fed meeting, going into better numbers in terms of inflation and the PPI, and if we see things hold up a little bit, and because people got a little bit ahead of themselves with buying these bonds and getting a little bit crazy about it, that you may see the opportunity for a quick reversal. And notice here, the aileron. You see that? We've had a great run on this for a long time. Momentum has shifted dramatically after we saw a cluster that was formed, saying an overbought situation within about 5 or 6 days in this daily. So I would be a little bit cautious on this and look to possibly realize that you want to tighten up your stocks on the bonds, on the TLT, which is the an ETF that invests in long bonds, essentially. And look for this. Right now, it's down about 18 basis points, down 24 cents on the day. So you can open up a little bit below that level. Where it goes from here, like I said, I do not see any opportunity that looks really negative against the fact that it could drop down to about 125, get bonds normalizing a little bit again. We had a few more questions on a few things. I'm just going to look at Bed Bath & Beyond, Vile, as we call it. This chart is pretty disgusting. Stock has been just in a total death spiral since forever. Kind of, there was some discussion about private equity coming in. Then the realization was, hey, this isn't going to work out. Where's it go from here? We're kind of approaching a prior low. Unless they do something magical, I don't have a lot of support for that. We're going to close it up here. We're ending up really close to 9:30 in the morning, right before the market opens. I want to mention again, to be very clear, that anybody that does, in fact, subscribe to the Commander Series will get a 4-hour free online coaching session that we have available for you at your own leisure. You kind of watch at your own pace. We'll give that to you. So if you do subscribe to it as a subscriber, we will give that to you and make that accessible to you. You can also try out all our products with a 10-day free trial over on Trigger Charts. You know what? You're going to be happy you did, because if you like me, you like it easy. You like to understand what's going on, but not get too complicated so you can make quick decisions. A lot's happening during the day that has a lot of moving parts, and you want to make sure that you're on top of things. So with that, we're going to end this today, and I want to make sure that you join us again next week on Friday, 9 o'clock in the morning for the pre-market rundown. Thanks for joining me.